Alright class, this is the live lesson for chapter 7. So I'm going to explain some key terms that we are using in the cash flow statement. So the first thing we use is what? The cash flow statement always start from profit before tax. And then after that, we do the adjustment for what? Adjustment for non-cash transaction. It means that those transactions without the cash movement. Example, such as depreciation, gain or loss on disposal, bad and doubtful debts, for example. And also you need to adjust with the interest, income, and expenses. So one thing to take note, when you take in those non-cash transactions, for the expenses, you have to add. For the income, you have to minus. Class, do you understand what is the rationale behind these expenses we add, but for the income we have to minus? Do you understand the rationale for this? I mean the reason for this? Yoo-hoo! Do you understand this? Hello class, give me some response. Ooh, understand or not? Yes, say yes. Don't know, say don't know. Yes, say yes. No, say no. Don't know, say don't know. Yes, so I no need to explain why expenses is a positive or why income is a negative, right? Anyone need me to explain again? If not, then I will move to the next. No need. How about others? Really no need. So good. Or my video explain very clear. Clear? Okay. So for the expenses we add, and then for the income we minus. After that, after the adjustment of the non-cash transaction, the next thing that we are going to adjust is what? The next thing that we are going to do is changes in working capital. So example of working capital are trade receivables, trade payables, your inventory, prepayment. Those are the things that belongs to the changes in working capital. So we have to identify whether this item is a positive or negative in the cash flow statement. So there are something to remember. For your asset, if the value increase, the impact in cash flow is a negative. And if your asset value decrease, the impact in your cash flow is a positive. Positive means cash in. Negative means cash out. On the other hand, for your liability, if your liability value increase in your cash flow is a positive. If your liability decrease as compared to last year, the cash flow impact is a negative. Negative means cash up. Positive means cash in. Class, do I need to explain this to you? Why increase in asset is a cash out, why decrease in asset is cash in? And on the other hand, why liability increase is a cash in and why liability decrease is a cash out? Do I need to explain again? You. Oh, hey, give you some response. No need. Very clear, right? Yeah, because I think in the video I have explained this to you, right? Alright, very good. And then the next things that we are going to do in our cash flow statement is what? To adjust interest received or paid, and also adjust tax refund or tax paid. And also we have to adjust whether we have a dividend income, dividend received or paid. So after this, we can get cash flow from operating activities. So this is about the flow for cash flow from operating activity. Alright, so we start from profit before tax, do the non-cash adjustment, identify the changes in your working capital, and then adjust with your interest received or paid, tax refund or paid, and your dividend received or paid. Finally, you get your cash flow from operating activities. So you can take a look in your textbook here. This is from here up to here, operating activities. This is the first section of your cash flow statement. Second section is regarding investing activities. So in your investing activities, basically we used to record the payment to acquire non-current asset or the receipt from the sale of non-current asset. So this one quite straightforward. And then last section is your financing activities. In your financing activity, we record our equity and non-current liability movement. For example, if I issue ordinary share, it's a positive because I receive money. When I pay loan, it's a negative. And then if I receive the loan from bank, this is a positive. So after you complete 3 sections, you can identify whether this is a net increase or decrease in your cash. This amount. Where you get this amount? A, B, C. So this is A plus B plus C. If the amount is positive, increase. If the amount is negative, decrease. And then we adjust with opening cash and bank balances. So we get closing cash and bank balances. And take note that these two amounts must be net of bank overdraft. Let's say you have bank overdraft, you have to net off these two amounts together with your cash. So this is an introduction of your cash flow statement. Class, let me ask you a question. Which section in the cash flow statement you are not very clear and you wish me to further explain? Yoo-hoo! You have question or not? Do you have any question in this cash flow statement? You can tell me the section and then I can further explain to you. Got question or not? No. Wow, you all very smart, huh? Very clever, huh? No question one. So it means that you can do the home exercise, sorry, the classroom exercise yourself. This one. Can you do this your own? And then we discuss later. Can or cannot? Or you want to go through with me? Huh? Together, huh? Alright. Let's do a question together. So you can turn to your textbook, page 109. And then you also draw a cash flow statement like this. May I give you like 2 minutes? You draw the statement first. Together, we do together. Okay. You spend 2 minutes to prepare this cash flow statement. So let me know if you finish the drawing of your cash flow statement. Done. How about done? Alright. So we take a look on the question to understand what is going on for Yuri Stationery. Okay, let's start. A friend of you, Yuri, who owns a stationery shop, has asked your help. Wow, your friend need your help. He suspects that his manager is stealing money from the company, so his company is having cash flow difficulty currently. According to him, the company operating profit for the financial year ended 31st March 2021 is 8.9 million. Wow, the company is earning a good profit. However, the company is required to obtain bank overdraft during the year to solve the tight cash flow issues. He has no idea on the movement of cash. He further provides you the statement of financial position for the financial year. So from this statement of financial position, we can know that in the left hand side is the 2020 financial data. 2021 data is on the right hand side. Yuri has informed you that there is no disposal of any fixed asset during the financial year, no corporate taxation as his company is a sole trader. So what is the requirement? Please prepare a cash flow statement for Yuri Stationery for the year ended 31st March 2021. Next, based on your findings in the cash flow statement, please comment where his cash has gone. So let's have a quick look. You can see that in 2020, the company cash and bank balances is 6.68 million. At the same time, the company don't have any bank overdraft. But in 2021, the company cash and bank balances in the current asset is only 500,000. But the company is having a current liability, bank overdraft, 4 million. So Yuri is very concerned on why my company cash gradually reduced, but my company is showing a profit. Is it the manager stealing the money? So we have to prepare the cash flow statement and analyze for Yuri and explain where is the cash movement for Yuri. So let's take a look on the sample cash flow statement. So we know when we prepare the cash flow statement, we should start from what? Profit or loss before the tax. And then we take a look here. Unfortunately, we are not giving the income statement, right? So we have to figure out the amount ourselves. And at the same time, you see, they say that the operating profit for the financial year ended 31st March 2021 is 8.9 million. So can you tell me, what is the another name for operating profit? What is the other name for operating profit? Do you remember? I think you learned this in your principles of finance, right? Yes, very good. Another name is called what? Profit before interest and tax. But is it the information that we want? No, this is profit before interest and tax. We want what? Profit before tax. So this may not be the information that we want. And then we take a look on the company equity. It says that profit for the year 2021 is 8.6 million. We know this is what? This is profit after tax. That's why we say net profit. So we need to do some working on this profit after tax and also the operating profit. So let me share with you a working. So this is classroom exercise 7.2. So what information we have? We have operating profit, another name called PBIT. What's the amount? 8.9 million. We know after the profit before interest and tax, we will minus the interest expenses. But what is the interest expenses? We don't know. So we put a blank first. After that, we can get what? Profit before tax. Again, we don't know what is the amount. So we put the amount blank first. After that, we will minus taxation, the income tax of the company. And then finally, we get profit after tax. Another name for profit after tax is net profit. Am I right? This is the floor in the income statement. Alright, this is the floor in income statement. So for this question, what are the other information that we know? We take a look. We know the profit for the year, right? The net profit is 8.6 million. Alright, so this 8.6 million we will put at the bottom of our working. So let's see whether we have any information for the taxation. Taxation, no corporate taxation as the company is a sole trader. So when we come to here, taxation is 0. So we add back the amount. The profit before tax is 8.6 million. the profit before tax is same as profit after tax. Why? Because there is no taxation in the company. But from this comparison, can we identify the interest expenses? Yes, the interest expenses is 300,000. So from this working, we can find out some useful information in our cash flow statement. First, we know what is the profit before tax to use as the beginning of cash flow statement. Next, we also identify what is the interest expenses during the year. All right, this is interest expenses. So these two information we are going to use later in our cash flow statement. Plus, so far so good. Can you follow this? Am I too fast in explaining this? You no not too fast Can follow Alright. So basically this working help us to identify profit before tax and also the interest expenses. So can we move to the next adjustment? Should be okay, right? Right. Normally, the next adjustment that you need to do in your cash flow statement is regarding the property, plant, and equipment. In some situation, it will say that non-current asset. So for the property, plant, and equipment, we will break into two accounts. One is cost, one is accumulated depreciation account. So in these two accounts, we can identify some useful information such as the amount that you spend in purchasing the new asset or how much you get from the sale of the asset. Similarly, you can also get the depreciation amount from the accumulated depreciation account. So let's draw the account first. So I will do a simple one. Alright. So one is cost, one is accumulated depreciation. So we take a look in our question. So it says that the cost for the asset is 19,000 at 2020 and at the end of 2021 is 24,200. So we have a balance BT 19,000 and also balance CT 24,200. Alright. Plus, why the opening balances we put in debit and why the closing we put in credit? So first of all, cost is what? Is asset, right? For asset, the opening balances we put on debit. If your opening is at the debit, the closing will be on the credit. Alright, so cash flow statement also require your understanding in ledger. You must be good in your ledger so that you can make sure that your input is in the correct direction. Right, so this is the information we have from the textbook. And next, we are going to record the amount for the accumulated depreciation. Accumulated depreciation is also under the company asset, but this is a negative amount. That's why the direction for your accumulated depreciation will be totally opposite as compared to your cost. So let's get the information for your accumulated depreciation first. The opening is 4,600 and the closing is 5,200. 46 and 52. Right, this is the opening and closing balances. Okay, class. So far, are you following me? Am I too fast in explaining this? No, can follow, Alright, next, I'm going to explain what are the entries that we are going to record in the cost and accumulated depreciation. So let's take a look in your textbook. The textbook say that Yuri has informed you that no disposal of any fixed asset during the year 2021. It means that in the year 2021, we will not see any information on the disposal. So let me show you what are the possible entry in your cost. The possible entry in your cost will be addition, which is the purchase, and you may have disposal, and also you may have written off. So in this question, it says that there is no disposal, and we also assume that there is no written off. So the only information that you have in your cost account is what? Addition. So what is the double entry for your addition? We debit the asset account and credit to bank. Why credit to bank? Because bank make payment. So debit is on the asset. So from this, we can know that the missing information is on the debit side. What is the amount? The balancing amount is 5,200. So this 5,200, we are going to record in our investing activity. We are going to record this amount in our investing activity. So far so good, class. Are you following? Can So if I say if you have a disposal or written off, you will record this amount in the credit side. But for this question, we don't have this. So this is only for illustrative purposes. So next, we have to look at the accumulated depreciation account. So first of all, let's understand what are the possible entry in the accumulated depreciation account. The transaction that we have is what? Depreciation. We may also have disposal and also asset written off. Again, this question say that we don't have written off, we don't have disposal. So the only things we have is depreciation. So what is the double entry for depreciation? The double entry for depreciation is debit depreciation account and then credit to accumulated depreciation account. So meaning that credit, right? In the accumulated depreciation account, we will appear a depreciation at the credit side. What is the amount of the depreciation? The balancing amount is 600. Thank you, Jai. And this 600, we are going to show in our operating activities in the cash flow statement. Under which category? Non-cash transaction. Under non-cash transaction. Alright, so class, any question you want to ask about this? Any question you want to ask about this? Yoo-hoo! You have question or not? Hey class, I'm asking whether you have question. Why so silent? Okay, so these are the information that we have to record in our cash flow statement. But I want to share something with you. In some situation, you may not have the cost and accumulated depreciation account separately. You see, this example, they give you cost and they give you the breakdown of cost and also the breakdown of accumulated depreciation. But in some situation, it will only give you one account called what? Net book value. Alright, it may just give you one account called net book value. So net book value is the combination for your cost and also accumulated depreciation. So the entry will be the same. For buying the asset, bank you will still show in the debit side, and when you have a depreciation, it will still showing at the credit side. So let's see whether in our example, the home exercise, whether we have this example or not. Then I will show you how to do. Alright, so this is just for your illustrative purposes. Alright, so we have finished the adjustment for the property, plant and equipment. So we come to next section. Next section is talking about interest paid. Alright, we have to find out the interest paid amount. So for the interest paid, we have to draw one ledger. This ledger is interest payable account. So we go to our textbook to have a look on our interest payable. Interest payable account 0 in year 2020 and 120 in year 2021. So meaning that my balance BD is nothing, 0, and my balance CD is 120. Why the opening balances for interest payable we put on the credit side? Because this is what? Liability. For liability, the opening balances we put on credit. So in the interest payable account, we have two transactions. The first transaction we have is what? The interest expenses during the year. The next transaction we have is the payment. Why I put in the debit side? Because we debit interest payable and we credit to bank account. Credit bank, so debit in the interest payable account. For the interest expenses, we have the information already, right? 300. Remember, this information we get at the beginning, 300 interest expenses. So the missing amount, which is your interest paid, is how much? 180. So this information we are also required to show in our cash flow statement. So that's all for the adjustment. For this question, are we going to do the tax payable adjustment, tax paid adjustment? No, because this question, there is no income tax payable. So we are not required to do that. Alright, class, do you have any question in the interest payable account? No, no question. If no question, then we can go to our cash flow statement account. Alright. So this is a sample of cash flow statement. So for the cash flow statement, the first item that we show is what? Profit before tax. The amount 8,600. Next section, we are going to show non-cash transaction. Example of non-cash transaction, depreciation, and also interest expenses. Depreciation for this company, depreciation 600. For expenses, we show positive. Interest expenses, this one 300, we also show positive. So up to this stage, we have completed the non-cash transaction. The next thing we are going to do is doing the adjustment for your working capital. So we follow the sequence in our current asset. The first one, inventory. Year 2020 is 6,880, and in 2021 is 11,300. So can you tell me the movement? This movement is increase or decrease, and what is the impact in your cash flow? Alright, we calculate now. 11,300 minus 6,880. So the difference between them is 4,420. And can you tell me this amount is yes, increase 4,420. So this amount is a positive or negative in your cash flow statement? Positive or negative in your cash flow statement? So majority of the answer is negative, right? Yes, your answer is correct. Increase in your inventory we consider as a negative amount in your cash flow statement. Let me explain to you why is a negative. So we have 2-year data, 2020 and 2021. So this is our inventory, am I right? So 6880 and also 11,300. So we know the movement from 6880 to 11,300 is what? Increase. And the amount increases 4420. So tell me, what is the reason when you have an increase in your inventory? What is the reason why you have increase in your inventory? You buy more or you buy less? Yes, because you buy more of your inventory, right? So you have an increase in your inventory. So when you buy more, it means that you will pay more cash to a supplier. When you have increase in inventory, meaning that you buy more of your inventory. If you buy more inventory, it means that you pay more. If you pay more to your supplier, this is an outflow of cash. Yes, correct. We can say decrease of cash as well. That's why negative. Let me explain again. For inventory, if you have increase in inventory, meaning that you buy more from the supplier. When you buy more of your stock, your inventory, it means that you pay more. When you pay more, this is an outflow of cash, or we can say decrease in your cash. So this is a negative amount in your cash flow statement. Is my explanation clear? Yes, very good. So negative 4420, we have record in the statement of cash flow. All right, you can have a look again. All right, let's move on. The next item in your current asset is your trade receivable from 2,200 to 4,900. So obviously, this is increase in trade receivables. Amount of increase 4,900 minus 2,200. So we get 2,007. So my question, this 2,007 is a positive amount in the cash flow statement or negative amount in the cash flow statement? So Jocelyn answer negative, Angel answer negative. How about others? Xing Yi also negative, Yi Seng also negative, Yi An also negative. Alright, the final answer is negative 2,700. So let me explain this to you. So we have 2020, 2021. So this is your trade receivables. So from this comparison, we know that your trade receivables increased 2,700. Am I right? So this is what we know, increase. So tell me, what is trade receivables? It means that when we have credit sales to the customer, right? But the customer unpaid to us. So we have trade receivables. All right. I explain again. What is trade receivables? You sell the product to your customer, but your customer unpaid to you immediately. So we call credit sales. So we have trade receivables. When your trade receivable increase, meaning that you collect more from them or you collect less from them. So easy answer is receive lesser amount. Any other answer? We receive more from them or we receive less from them? That's right. Yes, correct. Meaning that we receive less amount from your trade receivables. We receive less amount from your trade receivables. So what is the impact in your cash flow? When you receive more, we say this is a cash inflow. When we receive less, this is a negative amount, meaning that we have cash outflow. Alright, so this 2,700 will appear as a negative amount in your cash flow statement. So let's go back to our textbook. Sorry, the working here. Working. Excel supporting table. Okay, so we have finished this trade receivables. Next one, prepayment also considered as our working capital. So this one obviously is an increase in your prepayment. So different amount is 420 minus 140. So it's 280. So negative. So we can say that if you have increase in your current asset, we appear as a negative amount in your cash flow statement. On the other hand, if this is a decrease in your current asset, then this is a positive. All right. So we look at the next working capital item. This is your trade payables. So trade payables from 4,300 to 3,600. So obviously this is what? Decrease in your trade payables. Amount of decrease, we use 4,003 minus 3,600. So the difference is 700. My question to you, this 700 is a positive amount or negative amount in your cash flow statement? So majority, or we can say all saying that this is a negative amount, right? So let us do some analysis. So this is 2020, this is 2021. So we are talking about trade payables from 4,003 to 3,006. So what is the trend? Obviously, this is an decrease in your trade payables, right? The amount decrease is 700. So let's discuss what is trade payables. Trade payables is you credit purchase from your supplier, right? And why you have trade payables? Because you unpaid when you purchase from them, right? So we have trade payables. So trade payables from 4,300 to 3,600 decreased by 700. So what is the reason when you have a decrease in your payable? The reason is due to you pay more to your supplier or you pay less to the supplier. So Iseng answer is pay more to supplier. Angel also say pay more. How about this? Pay more, right? Yes, we have paid more to the supplier. That's why our trade payable balances become lesser. When you pay more to the supplier, this is a cash outflow. That's why showing as a negative in your cash flow statement. So this is how we interpret increase or decrease in your current asset or current liability is a positive or negative amount in the cash flow statement. This is how we interpret. So hopefully you can use this method in your exam as well. Am I giving you a hint on this? So if you can get it, then you just get it, huh? All right. So 700 is a negative. So up to here, we can get a sub amount. This is cash flow from operating activities. So this is 1,000 for positive. And then we have to minus the interest payment. Our interest payment is 180 if I'm not wrong. Yeah, interest paid 180. So we put negative 180 here. So what we get, we get net cash flow from operating activities. So we have complete the first section. So far, any question? Or you need my further explanation for the item in your operating activities? Any question? No, huh? Alright, in between, if you have question, you can leave me a message. Don't worry. So let's move on. The next section in your cash flow statement is investing activities. So we have one item in the investing activity, which is your purchase of property, plant, and equipment. Where we can get this amount? From the cost here, 5,200. So let's record this. When you purchase asset, right, this is a cash outflow, so we put negative. So we get net cash flow used in investing activities. All right, next item, financing activities. So in the financing activity, we will show the movement of your capital and also whether you withdraw any money from the company. So let's take a look. So we don't have any long-term borrowing, right? We don't have any non-current liability. So we can skip the non-current liability section. We look at the equity. So in year 2020, my opening capital is 24,600. I have profit in 2020. I minus my drawing, I get my closing. So this closing will flow to year 2021 opening, meaning that actually there is no increase in the capital. So you don't miss out with this because the format they use is they use the closing balance and then bring to next year. And this profit for the year we have adjusted in our opening, sorry, has been shown in the profit before tax in your cash flow statement. So we only require to record the drawings. So drawings, this drawing is a negative 6,200. So what we can get net cash flow used in financing activity. All right. So basically we have complete this tree. All right, after that, we have to sum up your cash flow in your operating, investing, and financing. The net amount is a negative 10180, right? So what is this? This is net decrease in cash. Net decrease in cash. And then we also need to show what is the opening cash balance. Let me check the wording we use. The wording we use, opening cash and bank balances. Okay, opening cash and bank balances. And then we have closing cash and bank balances. So your opening cash and bank balances, how you can get 6680? 6680, because we don't have overdraft, right? So we are not required to net off. So 6680. And then let's check whether we can get the same amount. Our closing cash and bank balances is a negative 3,500. So we can do a working. The cash we have is 500 here. The bank overdraft we have is how much? Is 4,000. How I get 4,000? Here. And bank overdraft is a borrowing, so we put negative. So the net amount is how much? The net amount is negative 3,500, which can match with your closing cash and bank balances. If you can match the amount, meaning that your answer is correct. So that's all for your class exercise 7.2.